You hear us talk a lot about stocks and the markets and bond yields and things like that. And then you hear Craig Halgert later on during the show talk about commodities like food. So what are these different types of investments, and how do we use them? What do we consider a healthy use of them in a biblically responsible portfolio? Well, very simply, a stock is an ownership type of investment. So when you purchase shares of a stock, you are purchasing a proportional share of ownership in a publicly traded companies. So these shares can be sold in one of two ways: in an IPO or an initial public offering, or most often they are purchased on a secondary market from other people who are wanting to sell their shares. Stock comes in two different flavors, I guess you would say: common stock and preferred stock. So common stock is the type of stock that you most often hear about. They're just regular shares of a company. They have the ability to increase in price. They also have the ability to decrease in price based on what's happening with the company. And of course, the value in stock as a worst case scenario can totally plummet to zero if the company completely fails. Now, preferred stock is kind of a hybrid. It is sold like stock, but it works more like a bond, which we'll get to in just a second. So it's traded in shares, and it has an interest rate that generates income for you. And then sometimes those shares can be called back to the company if they want to pay off the debt that they have represented by the preferred shares, or they can just leave them out there for as long as they want to. Now, in stocks, you make money in one of two ways, or both. You can receive dividends. Now, a company will issue a dividend. Typically, when the company is making a profit, they will return value to shareholders in the form of a per share dividend. So that's how you share in the company's profit. You can also make money in stocks by price appreciation of the share. Now, long term, what drives price appreciation is a successful company. So when management is executing a successful business plan, they're making wise use of debt, they're making a good product or service, their sales are increasing, they're watching their expenses, they're being diligent to use the resources of the company in a good way to make money. That is how you can make money in stocks. Bonds, on the other hand, are loanership type of investments. So bondholders are creditors of companies, governments, or municipalities. You make money primarily through interest. You let a company, government, or municipality borrow your money for a set time period, and you get a promise that they're going to give it back at some future date that is stated. And in the meantime, they pay you a fixed stream of income that you can spend. You can also, values of bonds can also be volatile. Interest rates will definitely affect bonds because bonds can be bought and sold on the secondary market. So if someone is willing to sell theirs and you want to buy one, you could get a bond that is paying a higher interest rate or a lower interest rate than what the current going rate is. And you'll make that kind of smart to do by the price by what you pay for the bond. So interest rates definitely do affect prices of bonds. Commodities are raw products like food, metals, gold, silver, corn, wheat, those kind of things. The hard commodities are things like the metals that we see: oil, gold, metals. The soft commodities are what you hear Craig Halgert talk about: the wheat, corn, pork bellies, beef, all of those things. Commodities can be purchased for delivery, by people who would process them or sell them, or by contract, so they can be traded. So our strategy primarily involves stocks and bonds. We We don't really have, there are some companies that we have on our list that are very active in the commodities market and process and sell commodities. But we focus mostly on the stocks and bonds portion, those asset classes for our strategy. Now, the most important thing that we determine, or that the most important factor when determining whether or not we're going to own any stock or bond, is whether or not it's biblically responsible. So that is the most healthy use of stocks and bonds. When we own something with God's money, we want to make sure that it's not funding an agenda that God detests.